Welcome back. If you have just joined us, of course, you are watching a Closing Bell Southern Africa. Now, Africa's biggest pension fund manager recently threw its weight essentially behind Grit Real Investment Income Group through a $48.5 million injection in the London-listed property group for the development of its assets on the continent. And to discuss the prospects for real estate here in Africa, I'm joined by Greg Pearson, CEO at Gateway Real Estate Africa, which is where the Africa part of the management and portfolio development does take place. But Greg, I do understand that you are visiting South Africa right now. You've landed fresh in the country, and I do know it's also a time where a lot of travelers come here for tourism purposes, but of course you're not here for tourism purposes. So what brings you to town?
Thank you very much. So yes, recently we have closed on the rights issue at GRIA, as it's called, which is part of the Grit Group, the London-listed group. We're in town this week. All of our financiers are based out of South Africa, or the majority of them, and also to see our client, which is the GEPF, to talk about more strategy into the balance of the continent, and recently, with the funds that have just arrived, the deployment of such.
And let's talk about the deployment then of those funds, because you have outlined to your shareholders that part of the funds will be used to pay down debt, but part of those funds will also be used to invest in the future. So talk to us about the second part of that question in terms of that investment in the future and what prospects you're seeing in the pipeline.
Yeah, absolutely. I mean, we sit in a very unique position in that our pipeline is large. We've got some really good core clients and partners that we've worked with across the African continent, and for that they want more of the same. You know, we've delivered in Kenya. We recently did a business processing outsourcing building called Enyo in Tartu City. That created close on 10,000 new jobs for the country of Kenya. And what we're looking to do across that BPO space is to enhance and create further opportunity. More recently, about a year and a half ago, the United States announced that they wanted 1.5 million of these jobs to come to Africa, which we have connected on. We've done our first major world-leading facility in Kenya, and there's a lot more to come with our partners, CCI, in that space.
You speak about Kenya, which is one of the areas, East Africa, that you have outlined as a sort of immediate or mid-term target area, along with West Africa. So maybe you can expand on what you are seeing there and the kind of plans that you've got for that region.
Absolutely. What we've done is, you know, we've got a very specific focus on pipeline and what we do well. In that, we've recently launched an industrial platform called Bora Africa. That's where our light industrial, our call center and data center space sit in. We've got a great partnership with African data centers. So we're looking at Nigeria on the west coast of Africa and Kenya on the east coast, where we've got good growth for the data centers and good uptake opportunity on that. So the growth really is across east and west. If we look at the BPO, the business processing outsource as well, that space is very buoyant at the moment, specifically in East Africa, where you've got the likes of Kenya, more recently Ethiopia, really coming to the party, understanding what they need to do as a country to get the cost of that down per seat, and winning more jobs for the continent of Africa, but more specifically for their countries as well. So if we follow those 3 or 4 clients that we've been working with for the better part of 10 years, you know, the pipeline is there. We understand each other. We're bringing hard currency into the continent. So when we're invoicing those clients, we're invoicing in US dollars and collecting in US dollars, which is also fantastic for the country. And over and above that is the amount of jobs that we're creating. Off the back of the developments that we do as well, we are EDGE certified. So what we often find in Africa is we quantum leap the rest of the world because the technology is so new. Sometimes it hasn't been delivered or constructed in first world countries, but we've got the benefit in Africa to actually become global leaders in that space, like more recently the development we did in Kenya called Enyo, which we believe is one of the best BPO spaces globally. And then also in Mauritius, we've just completed a building called the Precinct, which is an EDGE certified building and the first eco-district building of its kind in Africa.
So you were just talking about some of the foreign currency dynamics there, and I imagine that it reduces the risk somewhat of doing business on the continent. Except, I just would like to understand how your experience has been thereof. I mean, you're invoicing in dollars and you're doing this business in hard currency. Getting the money out, is there any issues there?
So we haven't had issues, and we don't foresee any issues because of how closely we work with treasuries and central banks. So our deposits are all in hard currency, and we keep our currency in US dollars. So the repatriation of that, we work with the countries. I mean, even through the crisis that we had in Mozambique, the likes of Kenya and more recently Ethiopia, we've had no issue moving Forex out of the country, but also with our investments that we have in the country, it gets registered properly. We follow all the right process, and we work with those local governments to make sure that the process and the regulation is adhered to, and with that we haven't had any issues to date. We have continued to distribute out to our shareholders, so the relationship has been really good, but it does take a lot of effort making sure that you're on top of process at any point in time.
So when you hear conversations on the continent about a move towards I was corrected earlier in my conversation with the South African Reserve Bank in terms of the definition of de-dollarization. He made the point that it has taken on a different kind of definition in this current framework around the geopolitics that we're talking about right now. But what the continent is trying to do is minimize the cost of doing business. And one of the areas that have been identified in doing so is transacting more and doing business more in local currency. So when you hear stuff like that, yes, how does that impact your thinking for your portfolio in the medium to long term?
So real estate is, again, a bit of an anomaly in that, you know, we do leverage, and, you know, if we went to our clients, being global clients, and asked them for 14, 15, up to 20% returns on our developments, you know, it wouldn't be feasible. So those developments wouldn't get off the ground. So if you look at the dollarization or you look at the local currencies and your lending rates, the banks need to come to the party. We need to reduce the spread that they're currently making at the moment, so the developers can actually get in and do the developments and use those local currencies as their base, not the hard currencies of the US dollars. Because, you know, for us, if we are going out to tender with a blue chip client, we are up against international developers that are lending in US dollars at 4, 5, 6, maybe 10%. If it's coming from Europe as well with the euro, it's a lot cheaper than the local currency. So we have to also be competitive in what we're putting out and making sure that we are global benchmarking. If we're building a data center and our interest rates are at 12 or 13%, we are non-competitive. We need to come in with a global mark. And that's why for us the US dollar or a hard currency benchmark is imperative. Also with international investors, when they look at our continent, they do see risk. And what we try and do is mitigate as much risk as possible. However, where we can use local currency, we do. Because for us it is super important to make sure that, yes, we get the inflow of dollars, but we support the local economy where possible. For us, the give back in the countries that we operate is imperative.
If I had to ask you to measure the risk thermometer of doing business in Africa right now, compared to the start of the year, before all the elections unfolded and before we saw some seismic moves in terms of the political dispensations in certain areas, yes, an observation was made that countries all over the world that actually voted out to reduce the majority of the incumbents happened to be countries where inflation and interest rates were high. Of course, we are seeing that come down all over the world, including in Africa, although some spots are still an anomaly. But if I ask you to measure the risk thermometer of your sector right now, in the aftermath of these elections, what would it be? Would it be higher than at the start of the year, or lower, or unchanged?
So I do think the risk has been reduced. If we look at the more opportunity that we have across the continent, the more that we have free and fair elections, the more that policies are put in place and adhered to by local governments, I think it gives investors a stronger sentiment that things will be done correctly. If you look at what's happened recently, Ghana's just gone through elections. More recently, Botswana, they've had a huge shift in leadership there, the elections that took place in South Africa. You know, for us, we look at the business opportunity, and we at all costs stay out of the politics to make sure that the business that we run has got longevity, irrespective of the parties in power. However, if you look at that, it does play a role. You know, there are some governments that step in that do not favour international investment. However, if we look across the continent and the sentiment of that in the last 12 to 18 months, we do see that there's more foreign investment coming back into our continent. You know, during COVID, that dried up completely. If you look at the London Stock Exchange, you look at the US investment into Africa, it was tough. It was tough raising currency and deploying cash into Africa. It still is in that environment. But if you've got the track record, you've got the connections, and you continue to produce the results that your investors are looking for, funding is available. And it's making sure that it's the right fit as well. You know, long-term investment is what we need in Africa. For us personally, we think it's difficult to get short-term investors, because you might be in the wrong cycle in our continent, trying to sell, get money back on balance sheet. But if you fall in the unfavorable cycle, you can't get the returns that you need, which again put pressure back on the business and the investors.
All right. So, Greg, I'm just going to steal 2 extra minutes. We are out of time, but just this new injection from the Government Employee Pension Fund of $48.5 million or so. It cements a historic relationship that you have had with the GEPF for a number of years now. But when we talk about outlook and what some of the you know, pension fund members, as it were, can expect from this relationship with the GEPF, I mean, you've mentioned your sector focuses in healthcare, light industrials. You spoke about the data centers, and I know that you also do some stuff with diplomatic accommodation thereof. Which of those industries are you most excited about in terms of return?
So I think, you know, our relationship with GEPF is really fantastic in that it gives a lot of comfort to the countries that we're investing in. It also brings the Africa platform together. The platform that GEPF have been looking for. And what we've done is, with the GEPF, we've created a vision and a platform that we can take 3 pillars of real estate across the continent. That is the diplomatic housing. So the amount that we've done with the likes of the American Embassy, the British Embassy, that pipeline is deep. So there's a lot more deployment that will happen in that, and that's more specific on the West Africa side. On the industrial, again, GEPF have been looking for further investment in the industrial platform. So Bora Africa is the perfect fit on that. That team that sits under the GRIT Group and under GRIA has got over $250 million worth of pipeline across 4 different African countries. So it is very sector specific. And then the data centers, for us, data centers have got a long way to go in Africa. We are one of the few that have got extensive experience in data centers, and the pipeline is deep as well. So if you look at the partnership that we've created with GEPF, and hopefully we'll bring in more pension funds in Africa as well, that will just give us a bigger platform to create more opportunity for the bigger endowment funds and investment funds abroad that are looking to come into Africa, and give them the stability that they require, knowing that someone like the GEPF has invested and taken this platform forward.
Okay, so more members in the party. It sounds like the more capital raising could be forthcoming.
Watch the space.
Okay.
Absolutely.
Make sure to come and talk to us about it when it does happen. But Greg, thanks so much for taking the time to join us here in studio, reflecting on some of the prospects on the continent's property sector, and certainly sounding quite optimistic about the road ahead. Greg Pearson, CEO at Gateway Real Estate, ushering us into our second break for the day as we reflect